So Jill, I think you based in Hong Kong, you probably be aware that the Greater Bay Area, the Guangdong, Hong Kong, Macau Greater Bay Area is the driver of the China's economy. So what do you see the opportunities for Coke Wine's investment in the regions and through Hong Kong as you already established in Hong Kong?
The Greater Bay Area is something that, it's quite staggering in terms of the scale. It's quite staggering in terms of the wealth that's already there. And the Chinese government clearly want to cultivate that as much as possible to ensure that that area is connected and the sort of ease of business is as straightforward as possible. Before the COVID pandemic, it was an area we were always doing activities in. So whether that's sort of working with partners that are already there, or just travelling up on a day and doing some client events and tastings in Shenzhen or Guangzhou. So I think look, crucial area. One we're keen to continue to do business in. We already have clients based across that region, and I think for us, we will continue to sort of cover that area from Hong Kong.
So Joe, as we all know, despite all the challenges during COVID and lockdown, the supply chain issues, amazingly, Coke Wine investment is expanding during this time in Hong Kong. So very well done to you and your team. Can you share what makes you the right time to grow now?
Sure. The wine market, like many things, behaved unusually throughout the pandemic. The people were stuck at home. They weren't able to go anywhere. They weren't able to go on a holiday. They weren't able to treat themselves. So actually, buying wine was a bit of an outlet for people. People bought better wine. People drank more wine, which is probably not necessarily a good thing. And people spent more money on wine. And actually, for the second half of 2020, from about March to the end of the year, we saw prices increase quite significantly. The growth and the wealth creation across the global economy is something that always benefits the wine market. And then, sort of in 2022, it's been a rocky year for investors after a very good couple of years. Volatility, inflation, these factors are tailwinds, for wine prices, and that's why we continue to see them go up in value. The reason why we're expanding our team is because, the business has been doing very well, and that's not only because we feel like we have the right offering, but the market's been very strong.
What is the benefit of making wine investment more accessible to regular investors?
Our vision as a business has always been to make that as accessible to people as possible. There is a growing desire amongst retail investors, high net worth individuals, investors across the board for hard asset classes, and wine, as we mentioned previously, is something that has a lot going for it from an investment point of view. So why shouldn't everyone have the access to that? What we're trying to do now is we're trying to utilise technology in order to make that as seamless as possible. So £10,000 is our minimum investment. That's something that you can do online. You don't have to speak to anyone. It's a portfolio is built for you based around your appetite for risk and term investment. And then we have sort of the entry level for our more sort of bespoke, tailored approach, which is £25,000. And at that level, you start getting a balanced portfolio across major regions, which is very much aligned to you as an individual and what you're looking to achieve. And I think that the wine market itself is ripe for. I don't want to say disruption because that's the wrong word, but I think it needs to be dragged into the 21st century because at the moment, it's a little bit antiquated, it's a little bit fragmented, and it's a little bit inefficient as well. So what we're trying to do is trying to change that.
So without giving too much away, what is your future plans?
Look, I think we have a very strong commitment towards China, towards Hong Kong, towards the region. It's crucial to the wine market. It's crucial to our business. I think at the moment, we actually operate fairly uninhibited in China from a competition point of view. I don't think that will be the case for moving forward because wine is becoming so popular. You're seeing more and more people talking about wine investment because it's quite a novel concept. We're in that position where we're already the market leader globally when it comes to wine investment. China, we need to really establish ourselves before someone else can come along and take our market share away from us. So our commitment in China is to go, right, we've got a really good foundation now. We're going to be making sure not only do we sort of try and capture clients and investors from that cohort of people that are already interested in wine, but actually educating the market itself and boosting the awareness of the category, I think is really important for us. We're launching a platform. So some of the points I mentioned to you about making it accessible to as many people as possible, and making it as frictionless as possible for people to try and buy wine. We have a platform that we're launching called Cult X, which will go, we think, a long way to solving some of those issues and making it a bit more straightforward for people that want to buy wine. And I think that China is going to be, because of just the nature of how people interact with investments and interact with their every aspect of their life, whether it's through WeChat, everything's on a platform, everything's through their phone. So we want to make sure that we can offer the same kind of service in China, and I think this platform will allow us to do that.